The risks and downsides of taking loans against
Golden credit cards. Let us understand through the following examples how gold loans and credit card debts can trap one in a cycle of financial stress.
Number 1. Loan against gold.
Scenario:
Imagine Ajay has some gold jewelry and he needs money urgently for a medical emergency. He decides to take a loan against his gold.
Now try to understand what are its possible negative effects. High interest rates.
While the loan is quickly approved, the interest rate is quite high, say 12 to 14% per annum. Over time, the interest accumulates and Ajay ends up paying much more than the original loan amount. It is worth noting here that interest rates on gold may vary from one lender to another.
Risk of losing the gold.
If Ajay is unable to repay the loan within the stipulated time, the lender has the right to auction off his gold. This could result in Ajay losing valuable family heirlooms that hold sentimental value.
Financial strain.
The monthly repayments might strain Ajay's finances, especially if he already has other debts or if his income is inconsistent. This could lead to further borrowing, creating a cycle of debt.
Number 2. Credit card debt.
Scenario:
Rekha, a young professional, enjoys shopping and frequently uses her credit card for purchases. She only pays the minimum amount due each month, leaving a balance that accrues interest.
Here are some of the potential negative impacts that can affect a person's financial situation if the card is not used properly. High interest rates.
Credit cards typically have very high interest rates, sometimes 25 to 45% annually. However, this may vary from one card to another. Rekha's outstanding balance grows rapidly due to compound interest. For example, a 1,000 rupee balance can quickly balloon to 1,200 rupees, 1,500 rupees, or more if not paid off quickly.
Debt spiral.
By only paying the minimum amount each month, Rekha's debt keeps growing. She might start using her credit card to pay for everyday expenses, leading to a cycle
Where her debt increases faster than she can pay it off. Credit score damage.
If Rekha misses payments or consistently carries a high balance relative to her credit limit,
Her credit score will drop.
a lower credit score can make it difficult for her to get loans or result in higher interest rates in the future.
Mental stress.
The burden of growing debt and the constant worry of making payments can lead to significant mental stress.
Rekha might find herself anxious, which could affect her productivity at work and her overall quality of life.
Conclusion.
Both scenarios illustrate how borrowing, whether through gold loans or credit cards, can lead to financial difficulties if not managed carefully. High interest rates, the risk of losing assets, and the potential for a debt spiral are common consequences.
It's essential to borrow responsibly, understand the terms, and have a clear plan for repayment to avoid these negative effects.
Please note, the interest rates quoted for gold loan and credit card borrowings may not be accurate as they change from time to time.
Thank you all very much. Presentation by Dr. Vibhash Chandra Jha.